Welcome to today's trading tutorial, where we'll delve into the art of trading with the Regularized Moving Average Oscillator Suite Indicator. The Regularized Moving Average Oscillator is a powerful trading tool designed to provide in-depth insights into market trends and dynamics. It's easy to access and use. First, head over to TradingView and select the asset of your choice and preferred time frame. Choose anything between 5 minutes and 4 hours. For this example, the 15-minute time frame will be utilized. Now, to find the indicator, search for the keyword Regularized Moving Average Oscillator Suite. Select the one by quantiluxe. The Regularized MA Oscillator Suite calculates the moving average, MA, based on user-defined parameters such as length, moving average type, and custom smoothing factors. It then derives the mean and standard deviation of the MA using a normalized period. Finally, it computes the z-score by subtracting the mean from the MA and dividing it by the standard deviation. The oscillator comes loaded with key features and functionalities. The central access point for this indicator's analysis is the zero line. The overbought and oversold levels are represented by the upper and lower levels. Then there's the Z-line, which changes color between green and red. A red Z-line indicates the market might be overbought when it enters the upper level. A green Z-line, on the other hand, signals the market might be oversold when it enters the lower level. The Regularized Moving Average Oscillator also features reversal point bubbles in the deep oversold and overbought levels. The green bubble at the bottom signals a potential bullish trend reversal, while the red bubble at the top signals a potential bearish trend reversal. Now, how can this indicator be used to trade? The first method utilizes the oscillator as a trend-following strategy. When the Z-line goes above the zero line and turns green, it's time to enter a long position. Conversely, when the Z-line goes below the zero line and turns red, it's time to enter a short position. The second method involves using the oscillator in a mean reversion strategy. This strategy is based on the principle that prices tend to revert to the average. If the price extends too high, it's likely to come back to the average, and vice versa. So, when the market is oversold, signaled by a red reversal bubble, you enter a long position. And when the market is overbought, signaled by a red reversal bubble, you enter a short position. The second method of trading with this indicator is to use it as a mean reversion trading strategy. Mean reversion is a concept in trading that suggests that prices and returns eventually move back toward their average. So, when a price extends too high, it tends to shift back towards the average, and the same applies when it dips too low. The idea is to buy at oversold levels and sell at overbought levels. To facilitate this, we'll need to access the indicator settings and on the Inputs tab, adjust the length to 10 and the regularized length to 20. To make this trading strategy more effective and powerful, we need to add another technical called the SuperTrend indicator by Everget to the chart. For the SuperTrend indicator, change the ATR period to 34 and the ATR multiplier to 5. Disable the buy label and the sell label. Now we have both indicators set up. This strategy doesn't stop there, though. It also incorporates a price action confluence, which means looking for a break and retest of a support or resistance level or a strong rejection of these levels. Let's break down how this strategy works with a potential long position. First, confirm a bullish trend using the SuperTrend indicator. If it's green and the price is trading above it, that's a bullish trend. Next, look for a pullback within this trend. This will be signaled by the line of the moving average oscillator changing color from green to red and then back to green. The pullback should last a minimum of 5 candles and a maximum of 10. The entry candle is then the first one that corresponds to the first green area on the moving average oscillator. To maximize profitability, add the price action confluence. Once the entry candle is identified, look at the price structure. A clear resistance level should be present, and the price needs to break and retest that level just before the entry candle. If there isn't a resistance level, a support level can also be used, with the price rejecting off that level just before the entry candle. Once all conditions are met, enter a long position. Set the stop loss just below the resistance level and the take profit at 2 times the risk. Then let the trade run its course. It's time we break down how this strategy works with a potential short position. First, confirm a bearish trend using the SuperTrend indicator. The V-line of the moving average changes to red, and the price is trading below it. That's a bearish trend. Next, look for a pullback within this trend. This will be signaled by the line of the moving average oscillator changing color from red to green and then back to red. The pullback should last a minimum of 5 candles and a maximum of 10. The entry candle is then the first one that corresponds to the first red area on the moving average oscillator. To maximize profitability, add the price action confluence. Once the entry candle is identified, look at the price structure. A clear support level should be present, and the price needs to break and retest that level just before the entry candle. If there isn't a support level, a resistance level can also be used, with the price rejecting off that level just before the entry candle. Once all conditions are met, enter a short position. Set the stop loss just above the previous support level and take profit at 2 times the risk. Then let the trade run its course.